with a digital token, cryptographic object that is issued on decentralized peer-to-peer network, records ownership and transfers this ownership on this blockchain, we call it, right? So this is basically, when you talk about, for example, token representing real estate or venture capital or a company, this is, tokenization, you can actually call it securitization. That is basically done in a technically different way. That's securitization. So you securitize asset or this is decentralized global network, and transfer of ownership happens in almost instant way, just as you transfer Bitcoin, right? The same way you could transfer houses, companies, shares, everything, right? And this is the way we're going to own everything in the future, right? So it's fractional ownership. It's 24/7 access to trading those assets. It's, this decentralized record of ownership. This is a big deal, right? So because previously, as we had centralized, system of keeping track who owns what to whom, and in terms of money or ownership in real assets, this is always subject to mistakes, to falsifications, and this is why we created this system of intermediaries, right? Look at exchanges, banks, custody, clearinghouse. All of those players are needed when the ledger is centralized. So maybe just to give you a little bit better idea, what does it mean, tokenized assets? Let's look at one of the cases. For example, real estate. How does it work? That was, one of the interesting bigger cases of issuance of the token. I hope you all can see it. So basically, there was there is this nice Regis hotel in Aspen in the mountains in US, right? It is 100 million property, and it was the decision was initially about, do we do the IPO as a single REIT structure? This is a standard structure that we know in financial markets, how to participate or invest in such big properties. But then basically the owner decided to do it differently. So about 18% of this asset was offered in the form of a token, right? So the token, Ethereum 20 token, was issued, was called Aspen coin, right? And this Aspen coin was sold to investors who could invest in cryptocurrencies or fiat, but basically they received the token into their wallet, right? Already today, if you use a EtherScan, you can look up who owns this token. You will see it's because you don't know who it is. You see just addresses, right? But this is an example where this global ledger is really transparent, and tokenization is done on the public blockchain. This is kind of like just to give you an overview, where do we stand today. So how many ICOs were already concluded? About 40. Most of them, it looks like, the success rate is like really much higher than with ICOs, right? About 40 were concluded. Some were completely private, but mostly it was public sale. Upcoming, around 60. And active about 40. So we are talking about 100 companies and STOs that are currently in place. This is quite a good number, right? Keeping in view that this is just the beginning. The challenges of issuing a security token is that you're back to existing legal framework of distributing securities, which is very restrictive, If you want to sell a security, you need to register it in a country of issuance. So basically, if you want to have a global distribution, kind of like utility token, you need to go to each country, to each regulator, and say, oh, by the way, I want to offer this to public. I need to, have a company on the ground. I need to have financial statements for the company, financial audit. I need to register the security for public distribution. this is something that is actually mission impossible. Something like this does not exist today. This is why we have no global exchanges, right? You do your IPO either, on Japanese stock exchange, in London Stock Exchange, or at Nasdaq. There is no global IPO in a way, in the sense how we had ICOs, right? That people from all over the world could contribute money and have a piece of the company. So from the legal perspective, STO is a challenging thing, right? And there are several disadvantages that are common with this, right? For example, if your token, if you want to, owners of your token to be users of your platform, well, you need to sell them now a share in your company. And in most countries, well, because shares in a startup, it's very risky investment, so in most countries, it's regulated in a way that this shares only rich people, so-called accredited investors, can purchase the shares, right? So that means you cannot give it to the users of your platform. You can only give it to people 1 million plus. But then, if you're really building a platform business and you want, to incentivize the users, you cannot do it. And in the same way, you cannot distribute the token share to a company as a reward to everybody on your platform, because you would be giving them security. And, you might not be able to do it if you have some Japanese or American customers, for God's sake.
As Olga mentioned, I'm sort of one of the old timers in the space since 2012. And it's really come a long way. As Olga mentioned, the very first protocol to do assets on the blockchain was actually Bitcoin. The Mastercoin Foundation created their first protocol and launched in April of 2014. They got funded in late 13, but then the code launched in April 1st of 2014. And pretty early on, people realized sort of there's a lot of limitations to issuing on the Bitcoin protocol. It has a very limited amount of functions that you can run, if you think about it like a computer. And so people are able to issue tokens, but very sort of simple tokens. Think of them as fungible tokens like Tether USD. So is anybody familiar with Tether USD in the blockchain space? So today this is known as a stable coin. So $1 is pegged to one of these tokens. So there are more than $2 billion today pegged to Tether USD. So it's probably, I think, still by far the largest stablecoin system in the world, and it launched on Bitcoin. And though people wanted to do more advanced things with assets on the blockchain, and that's really, I think, where Vitalik drew his inspiration, is he wanted to run all sorts of smart contracts and more advanced scripts on the blockchain, and decided to create Ethereum. And when we had the launch of Ethereum in 2015, and shortly thereafter, the popularization of ERC20, which is the standard by which you issue tokens on Ethereum, that really made it very easy for the first time, somebody to issue an asset on the blockchain. So imagine before this, it's sort of like you wanted to do an offering. It's like you had to build your own law firm in order to do your offering. So as soon as somebody built a law firm, if you will, on the protocol, then it was very easy to issue these contracts. There were lots of templates that you could use. And so this really took off in 2016 and 2017. And the idea of funding open source software was the first big thing that gained traction. And so as we saw that mature, as you said, people wanted to go beyond utility tokens, beyond open source, and start issuing securities. So one of the first protocols to do that, or to start talking about that in early 17, was Polymath. So Trevor Kavorko and I have been friends, I think, since 2013 in the space, and he sort of realized this difficulty. He went to issue his own security token, and he said, it took me months, it cost me an enormous amount of money, there's so much friction, I can't just solve this problem for myself, I have to solve it for everybody else. And as Olga highlighted, they're one of the groups that has now sort of moved into this space of issuance, creating the smart contracts themselves. And that's really important because we sort of need that in each jurisdiction globally in order to get this right, because there are different rules for offerings in every different jurisdiction. And so I think we're really going to have a very global perspective when it comes to security tokens. We need issuers in every jurisdiction. We need exchanges that can comply in every jurisdiction. You need brokers and qualified agents that have these different platforms for funding the security token offerings. So there's a whole ecosystem that's really coming together. It's pretty exciting. As Olga compared it, it's almost like we're building a globally interoperable stock exchange for the first time ever, right? You'd never been able to do this before because you didn't have, from a technical perspective, a system of record that everybody agreed on, right? Before this, every company has its own database, and they say this is the state of the world. But as soon as you go outside of your four walls, I'll need an auditor to check that. I'll need, a lot of process by which to verify facts. So that's the technical advantage that blockchain companies are building on top of, is this advantage of having a global ledger, a universal ledger for all of the records involved. So as Olga mentioned, there's several different standards on the technical side. Most of them have now been issued on Ethereum. A few are using Security Token 20 standard on Polymath. Some are coming out on other platforms. But the goal is, no matter which technical standards we use, that the companies really do this collaboration. And I think Olga really hit on the nail on the head when she talked about that need for collaboration. For this to have a deep, liquid secondary market globally, we need collaboration between the different exchanges around the world. And so, as Olga mentioned, my current focus is with Yeoman's Growth Capital, or YGC, is think of a private equity or growth capital firm. And we're exclusively focused on blockchain technology and partnering globally with different exchanges and issuers so that we can get this interoperability going.